Hello everyone, and welcome. I'm your local real estate professional here in Sullivan County, New York, and today we're diving into a topic that can feel intimidating but is essential for investors, business owners, and property developers: commercial real estate loans. Whether you're looking at a mixed-use building in Monticello, a retail strip in Liberty, or a hospitality project near the resorts and casinos, understanding your financing options is the foundation of a successful investment. Let's break it down clearly, simply, and with real-world context from right here in Sullivan County. What counts as commercial real estate? In Sullivan County, commercial real estate typically includes mixed-use buildings, retail storefronts, office buildings, warehouses, and industrial properties, multifamily properties with 5 or more units, hospitality assets, hotels, inns, resorts. Land intended for commercial development, anything 5+ units, or used for business purposes falls under commercial lending, not residential. Types of commercial loans available: 1. Traditional commercial mortgages. These come from banks or credit unions and are the most common option. Typical features: 20 to 30% down payment, 5 to 10-year loan terms, amortized over 20 to 25 years. Rates depend on credit, property type, and income. Local lenders in Sullivan County often prefer properties with strong rental history or stable business tenants. 2. SBA loans, Small Business Administration. These are not FHA loans, but they are government-backed and often confused with FHA. 2 main SBA programs apply: SBA 504 loan, Grade 4, owner-occupied commercial buildings, equipment-heavy businesses, expansion projects. Benefits: low down payment, as low as 10%, long-term fixed rates. SBA 7A loan, more flexible, can be used for real estate, working capital, or business acquisition, often used for mixed-use or hospitality in Sullivan County. 3. FHA-related guidelines. Important clarification: FHA loans do not directly finance commercial properties, but FHA guidelines matter in 2 situations. A. Mixed-use properties. FHA allows mixed-use buildings if at least 51% of the property is residential and the commercial use does not impair the residential character. However, FHA only applies to 1 to 4 unit properties. Anything 5+ units becomes commercial and requires commercial financing, so FHA guidelines help when buyer wants to purchase a 2 to 4 unit building with a storefront. The commercial space is limited and non-intrusive. The buyer will own or occupy one of the residential units. B. HUD multifamily programs. These are often used for larger projects in Sullivan County, especially near redevelopment zones. Examples: HUD 223F for acquisition/refinance of multifamily, HUD 221D. 4. For new construction. These programs follow FHA-style underwriting standards, strict appraisal requirements, environmental reviews, long-term amortization, lower down payments. They are ideal for 20+ unit apartment buildings, workforce housing, senior housing. What lenders look for in Sullivan County: commercial lenders evaluate the property first, then the borrower. Property factors: net operating income, NOI, rent roll, stability, condition of the building, location. For example, Monticello versus more rural towns, zoning compliance, environmental concerns, common in older industrial sites. Borrower factors: credit score, liquidity, experience managing similar properties, business plan for the asset, down payments and rates. Typical ranges: while every lender differs, here's what you'll commonly see in Sullivan County. Loan type: down payment notes, traditional commercial 20 to 30%, most common SBA 504 10 to 20%, owner occupied only SBA 7A 10 to 20%, flexible use HUD/FHA multifamily 10 to 15%, large projects only. Example scenarios: Scenario 1, mixed use building in Monticello, 3 apartments plus 1 storefront, buyer wants to live in 1 unit. FHA may apply if commercial space is limited. Otherwise, commercial loan required. Scenario 2, 12-unit apartment building in Liberty, purely residential but 5+ units, requires commercial or HUD multifamily financing. Scenario 3, retail plaza in Fallsburg, income producing, traditional commercial loan with 25% down. Why Sullivan County is unique: Sullivan County has a growing hospitality sector, affordable entry points compared to downstate, strong demand for rentals, ongoing redevelopment around the casino and resorts. This makes it attractive for both small investors and large developers. Closing statement: commercial real estate in Sullivan County offers incredible opportunities, but the financing side can be complex. Understanding the difference between traditional commercial loans, SBA programs, and FHA-related guidelines, especially for mixed-use or multifamily projects, helps you make confident, strategic decisions. If you're exploring a commercial purchase, evaluating a mixed-use building, or planning a development project, I'm here to guide you every step of the way. Use the link below to contact us.